composition is a mystery. Could this prove that Columbus wasn't the first to discover America?
If it's a fake, it was done by a master.
Nova, the Viking deception.
Next time on Nature. One morning, nearly 30 years ago, hunters killed an orangutan mother and kidnapped her baby. But this was not the end of the story.
He escaped.
Against all odds, this orphan named Kusasi has dominated for a decade, beckoning the curious from around the world.
He's got me. He's so unbelievably strong.
It's a story of survival, a story of Kusasi's rise.
You're watching viewer-supported Vermont Public Television, where you belong.
Hi, I'm Leanne Lee. At Vermont Public Television, learning never ends. And with that in mind, we are planning another tour, and you're invited. Departing on May 7th, we'll be...
Auschwitz, inside the Nazi state, is made possible by the Corporation for Public Broadcasting, Peter and Helen Bing, the Arthur Vining Davis Foundations, the Wasserman Foundation, and by contributions to your PBS station from viewers like you. Thank you.
We are PBS.
You're watching viewer-supported Vermont Public Television, where you belong.
Next time on Nature, join TV correspondent Lynn Scher as she spends some quality time with her favorite four-legged creature.
What a fabulous way to eat breakfast.
That's 1 foot.
Tune in Sunday night at 8 on Vermont Public Television.
For anyone who's ever wished they could just leave it all behind, comes the story of one man who did. A journey into the heart of the wilderness and the wilds of the human heart.
Ahead of us lies 1,000 miles and a 10-week journey.
An African voyage down the Crocodile River. Next time on One Man's Journey.
Don't miss the conclusion, Sunday at 4.
Broadcast of Nightly Business Report on Vermont Public Television is supported in part by Standard Radio Montreal's Talk Rock Hot radio stations, CJAD 800, Shom 97.7, Mix 96, by Merchants Bank, Vermont's community bank, providing banking solutions to individuals and businesses. This program is also supported by contributing members like you.
The Federal Reserve does it again. The Open Market Committee raises interest rates. We'll tell you by how much, the reasons behind the hike this time around, and get some analysis on what the Fed might do next.
It's a critical crossroads for President Bush. Tonight's State of the Union address will detail his plans to reform Social Security. We'll have a preview of what to expect.
Shares of Boeing take flight after the aircraft maker reports a brighter than expected financial picture. We talk with Boeing's CEO about the outlook for its new jumbo jet.
And if you want your money to grow, you might want to farm it out. Tonight's the question to ask before you sign up with a financial planner.
I'm Susie Garrow.
And I'm Jeff Yasteen. Paul Kangas is off tonight. This is Nightly Business Report for Wednesday, February 2nd.
Nightly Business Report is made possible by...
In 1887, Albert Gallatin Edwards had the foresight to start a financial company that put the client first. He also had the foresight not to name the company Albert Gallatin Edwards. AG Edwards.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
Good evening, everyone. Another interest rate hike by the Federal Reserve today. Policymakers raised the key short-term rate by a 1/4 percentage point, bringing the federal funds rate to 2.5%. The hike is the first for 2005 and the 6th straight increase since the Fed began raising rates last June. As Erica Miller reports, experts say the Fed is far from finished.
There was barely a stir as word of the rate hike hit trading floors. Experts say the move was so well telegraphed, it was almost a non-event. The federal funds rate now stands at 2.5%, the highest level since October 2001. Economists say today's move is part of the Fed's plan to bring interest rates back to more normal levels.
The Fed wants to get policy back to neutral, but they want to try and do it without rattling the bond market the way they did in 1994. And right now they're being extraordinarily successful in not rattling the markets.
There were also no surprises in the statement accompanying the Fed's decision. It was basically identical to the one issued at the last meeting, December 14th.
They still see the economy expanding at a solid pace. They see inflation as well contained. They see policy as still accommodative even after this additional rate hike.
The Fed also repeated its intent to raise rates at a measured pace, as it has done the past 6 times. But the central bank was careful to leave its options open, saying again it will respond to changes in the economic outlook. Economists are certain there will be another 1/4 point increase at the Fed's next meeting, March 22nd, with no significant changes in the statement. The big unknown is when the tightening cycle will end, and at what level.
I'm not sure the Fed knows in advance, except they have, a number of Fed members have given hints that when they've been asked where neutral is on the Fed funds rate, they've given ranges that have been around 4%.
Economists say any hints of change in the Fed's thinking could come in Fed Chairman Alan Greenspan's semi-annual testimony before Congress later this month. They hope he'll better detail the risk of inflation. Erica Miller, Nightly Business Report, New York.
Joining us now for more analysis of the Fed decision, Michelle Girard, senior economist at Greenwich Capital Management. Hi, Michelle.
Hi, Susie.
All right, very predictable decision from the Fed. The statement, almost word for word what it was at the last meeting. So what's your analysis of the Fed's thinking at this juncture?
Well, you're exactly right. They changed one word. I mean, the joke was they met for 2 days and changed one word in the statement. You know, basically it tells us that the Fed is very comfortable with their, outlook for growth. They're happy with what the economy is doing. They're very comfortable with what the inflation picture looks like, and they're very satisfied with their current path of raising interest rates, 25 basis points a meeting. They obviously don't feel any need to adjust, the not only the tightening campaign, but also market expectations. The market is looking for the Fed to continue raising interest rates at least through the middle of the year, and they didn't feel any need to signal that that expectation was wrong.
I've asked you this before, Michelle. When does the Fed stop raising rates? What's considered neutral?
Oh, everybody debates this. The range is, as you know, one of the economists in the package noted, that the Fed officials give is somewhere between 3 and 5%. I think, you know, that the neutral funds rate is higher than that. In the sense, I think it's at the upper end of the range, between 4.5% and 5%. So I think that the Fed will actually end up raising rates more this year than most people are expecting. But I don't think it's going to pose a risk for the economy or for the stock market. You know, again, this is all about the Fed taking their foot off the gas, not about them trying to slow the economy down. What they're trying to do is to raise rates and get to a neutral stance so that they don't risk letting, you know, if they wait too long, they risk perhaps prices starting to rise and then ultimately having to play catch up and raising rates a lot more than we're talking about now.
Let me ask you about that. Some people have suggested that the Federal Reserve should be explicit about its inflation target. How much inflation can the economy tolerate and still grow? What are your thoughts on that? And do you think it would lower anxiety for Wall Street?
Well, you know, I think the Fed is definitely working on improving transparency. We all have a much better idea about what the Fed is thinking. If they wanted to formalize that with an inflation target, you know, I don't have much issue one way or the other. I guess it would be nice to some extent to see the Fed's focus shift purely to inflation. Right now, you know, they have a double objective of having the economy at full employment and keeping prices stable. And that can be tricky to do. It'd be nice to see the Fed just charged with keeping inflation in check. I think that would make the Fed's job easier. And if this inflation target gets us to that point, then all the better.
We just got a little bit of time left, Michelle. I want to ask you that Alan Greenspan is going to be on Capitol Hill testifying to Congress about the state of the economy and monetary policy. What should investors be listening for?
Well, clearly what everyone's going to look for is what is the Fed thinking in terms of how high interest rates are ultimately going to go. I mean, I think we're going to hear the Fed very optimistic on the economy, very comfortable with inflation, and I don't think we're going to hear any signs of them pausing, but that's what the market's going to look for. What does the Fed think is neutral, and how high are rates going to go this year, and how fast?
Michelle, as always, we really enjoy talking to you and getting your insights. Thank you so much.
Thanks, Susie.
We've been speaking with Michelle Girard, Senior Economist at Greenwich Capital Management.
Well, Fed meeting or not, the bulls controlled the market throughout today's trading session. Buyers came in at the start, spurred by better than expected earnings from Boeing, which we'll detail in a moment. The Nasdaq gained ground on Google's stellar profits we told you about last night. The indices seesawed after the Fed's announcement, selling off and then regaining strength. So the Dow gaining almost 45 points at 10,596.79. The Nasdaq rising 6 1/3 points to 2,075 and a fraction. And the S&P 500 advancing 3 3/4 points to 1193.19. The Treasury said today it has no plans to bring back the 30-year bond, despite rumors to the contrary. And in today's trading, bonds barely budged on that Fed rate hike. The 10-year note dipping just 1/32 to 126 30 seconds. That leaves the yield